Gopal, so what are the implications of FATCA and CRS on an individual investor?
I would like to give you a brief background of what exactly is FATCA and CRS to answer your question appropriately. So, internationally, if you see, the governments have been very concerned about money flowing out of their country into various other jurisdictions and thus avoiding paying further tax on income earned on those assets which are flowing out of the country. These governments have been signing treaties with each other so that information can be exchanged and shared between the governments. FATCA is a US law which requires the countries which are signing agreements with the US to exchange information related to tax, related to investments, etc., which binds the country which is signing the intergovernmental agreement to provide those details to the US government. India has signed the intergovernmental agreement with the US to share information related to investments, financial assets, etc., which pertain to US persons, and US persons are defined as US citizens or US residents. This particular law also has a significant implication on various financial institutions elsewhere, including in India. What we are required to do is to collect information from investors, individuals as well as non-individuals, and various details to be then exchanged between the governments. If you see, what we have done in Axis Mutual Fund is we have got this particular form which a resident individual investor has to fill in, or any individual investor who is investing into our funds has to fill in. If you see, the main contents of the form require an investor to tell whether he is a tax resident of any other country other than India or not. If he is a tax resident of India, actually, and only India, then things become very simple. But if he is a tax resident of US, then this information and the various other details that he fills in this particular form, we have to submit it to the Income Tax Department of India, which in turn would provide these details to the IRS of US. So that is what is the requirement prescribed. So if you see, various things like place of birth of an investor or country of birth of an individual investor becomes very important. Similar to FATCA, there is another arrangement called Common Reporting Standard. India has signed an agreement which binds it to exchange this sort of an information, very similar to what we exchange with the US under FATCA, with close to 100 odd countries. We have to capture whether an investor is, say, from Australia, and then exchange that detail with Australian government. So this is something which FATCA has already come into existence. From 1st November across the mutual fund industry this has been implemented, and CRS comes into effect from 1st of January 2016. So that is broadly how it will have an implication on the individual investor. He has to give these details. These become mandatory from the dates I mentioned. If they don't provide these details, we actually are liable to their applications are liable to be rejected, because while we have an option of going back and getting things remediated, but because especially in a mutual fund sort of an investment product, you have NAV implications, etc. So rejection of an application after a number of days can have NAV implications. Either ways, the NAV could go up or down, and that is something which we want to avoid, which is why these applications could be liable to be rejected.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.